Welcome to our channel Stocks in the USA. Today, we'll once again analyze the market in search of excellent undervalued stocks. Are you interested in discovering a lesser-known stock with high growth potential, one that appears to have all the right cards for double-digit growth? Then watch the video until the end and you'll find out all the reasons why we've analyzed this excellent investment opportunity. But first, remember to subscribe to our channel, hit the like button, and activate notifications so you won't miss any new videos. Now, without further ado, let's get started. Today, the real estate sector is among the worst performers, having declined by 10.86% since the beginning of the year. In the current environment of elevated interest rates, it doesn't promise much until inflation shows clear signs of slowing down. Mortgage rates today are above 7%, slowing down property sales. However, as is often the case, this market downturn could present an excellent opportunity to uncover strong stocks that are poised to surge once the situation brightens. For this reason, the stock we're about to analyze possesses all the characteristics to be an outstanding long-term investment. Despite experiencing a significant drop not too long ago, this stock offers solid fundamentals and incredible prospects. Its value has tripled in the last year, yet it remains undervalued according to any market estimate. We are talking about Sterling Infrastructure Inc., STRL. Sterling Infrastructure is a company specializing in construction solutions, headquartered in Texas. The company focuses on three primary business segments, primarily operating in the United States, particularly in the South, Mid-Atlantic, Rocky Mountains, Hawaii, and the Northeast. The first segment, electronic infrastructure, of which it is a leader, focuses on large-scale projects. These include the development of systems and services for structures such as data centers, e-commerce distribution centers, warehouses, transportation infrastructure, and energy solutions, among many others. This segment ensures significant revenue and margin growth. The second segment, Transport Solutions, deals with projects related to the infrastructure and restoration of highways, roads, bridges, airports, ports, light railways, and stormwater drainage systems. Sterling Infrastructure is committed to improving and renewing these critical infrastructures for economic growth and connectivity. The third and final segment is dedicated to construction projects. Here, the company is involved in concrete foundations for single-family and multifamily residences, as well as parking structures, elevated floors, and other concrete-related work. This segment covers both residential and commercial activities, contributing to the construction and maintenance of various buildings. Sterling Infrastructure is committed to providing high-quality solutions in all these sectors, making a significant contribution to the growth and development of communities and infrastructure in the United States. Sterling Infrastructure has capitalized on the growing trend toward electric vehicles. The company has recently secured a significant project for the construction of an electric vehicle battery plant for Hyundai, along with a $45 million site development contract for Rivian's electric vehicle plant in Georgia. The growth of Sterling Infrastructure has been remarkable, evidenced by 9 consecutive profitable quarters. Thanks to exceptionally strong cash flows from recent positive results and a 42% increase in order backlog since the last quarter of 2022, the company's balance sheet is in a solid position. Revenues totaling $522.33 million have exceeded expectations, surpassing profit margin estimates. Furthermore, Sterling Infrastructure has recorded substantial organic revenue growth of 22%. Sterling's order backlog amounts to $100.6 billion, an increase of $210 million since the beginning of the year, and its gross order margins are almost 15%, the largest order margin in its history. With the gradual easing of supply chain constraints following the COVID-19 pandemic, Sterling has begun to recover some of the losses caused by inefficiencies that affected its margins. The company now plans to accelerate the implementation of its significant projects. Today, Sterling is trading at $72.45, with a market capitalization of $219 billion, and its potential target price significantly exceeds $90. But what risks could hinder Sterling's ascent? Supply chain restrictions and macroeconomic challenges pose a risk to industrial businesses, especially in a context of rising interest rates and more restrained consumer budgets. The rise in interest rates and the increase in raw material prices have led many companies to feel the impact of rising costs, which is a negative factor for their financial performance. A high level of financial leverage can lead to heavier interest expenses, putting companies that struggle to repay loans in a difficult financial position. The high cost of capital for companies unable to generate adequate returns could represent a significant financial challenge in the event of a market slowdown. In addition, labor shortages and health and safety risks also affect the construction and engineering sectors. Despite the priority given to safety, it is a point of pride for Sterling to have one of the best safety records in the industry, which is the cornerstone of its operations. In conclusion, it can be said that industrial sectors, especially construction, have experienced a period of significant instability due to factors such as economic slowdown, inflation, and geopolitical concerns. In a context where many companies struggle to grow and their market evaluations are not outstanding, Sterling shines with strong performance on each of the 5 key valuation indicators: growth, profitability, momentum, and EPS revisions. Sterling stands out as one of the leading stocks in the construction and engineering sector over the past year. With a robust order backlog, high-margin projects in progress, a culture of innovation and diversification in its operating segments, Sterling is in a strong financial position and has considerable momentum. Long-term investment in Sterling infrastructure should be seriously considered, especially in a sector recognized as one of the cornerstones of the U.S. economy. Finally, please note that we are not financial advisors, and these are not investment recommendations, but analyses based on our experience. We encourage you to supplement this information with other independent opinions to make informed decisions about how to invest your money in stocks. We hope you enjoyed this video. Let us know in the comments and tell us which other stocks you are interested in analyzing. See you soon, investors.